The Russell 2000 is up more than 18% so far this year. That compares to the S&P 500's 10.5% gain. But all of these sitting at record levels at this point. Not just those two averages. You've also got the Dow, the NASDAQ 100. Been a very beneficial time to be in equities, at least over the last several months. Joining us right now with his insights on small caps is Chris Retzler. He is portfolio manager of Needham Small Cap Growth Fund. And Chris, you think at this point that small caps are just getting started, that there's more room to run?
Well, I remember where we were about a year ago when all the tariff trouble was coming out and small caps really fell out of favor. What we've seen since then is stability and ability for companies to plan and invest. And the companies I've been visiting with since the beginning of the year, there's just tremendous excitement, expansion. They're growing. And then when you look at where the money's coming from, hyperscalers, there's over $700 billion. All that filters down. So when you look at it, one person's CapEx is another company's revenue. And that is filtering out to a lot of the smaller companies that are supplying these build-outs.
So is that what's driving all of the growth in the Russell 2000? It's not necessarily consumer-based companies. You're talking about the beneficiaries of AI and then the construction and other issues that go along with that?
Yeah, the consumer is certainly a bit weaker, higher oil prices, higher interest rates. But what we're seeing is the build out of infrastructure, military modernization. Our enemies are not sitting still. And unfortunately, we need to invest. So companies like drones, sonic missiles, everything that's been going on, we need to continue to invest. We're way behind. The companies we're visiting, they're hiring, they're expanding. Haven't seen this in a very, very long time.
Is the way to do that through the Russell 2000 index and buy all of them? Or do you tell people to buy specific companies or specific sectors within that index?
So we manage a more concentrated portfolio of growth companies, more focused on, good technological moats as opposed to just a broad index. So we've been having a great year this year. We'd like to continue doing that, being up about 74%.
74% versus the 18% that the Russell 2000 is up?
Correct. And, wow. We're very exposed to semi-cap equipment, infrastructure, military modernization, as I've mentioned. We think these trends can continue, but I wouldn't be blind to pulling some money out, trimming, and rotating to some of the names that haven't worked. But the consumer names are certainly an area that's, been weaker.
So you think that the growth that you've seen in those growthy areas, those specific places within the Russell 2000, maybe that momentum has peaked?
I wouldn't say it's peaked, but I think as a portfolio manager, you need to rebalance where you've, outperformed, and they may be big percentages in your fund. But as far as where the economy's going, it's very exciting. We've been traveling around the country, visiting conferences. The enthusiasm with business leaders couldn't be higher.
What are the issues that are facing some of the smaller businesses? For a long time, it's been trying to find the labor.
It's been that, but it's also was a recovery post-COVID where there was a lot of inventory they needed to build, work off that they had built up. I think policy needed to be in place, and we have that now. We have tax policy, taxes, tariff policy. While it's certainly there, at least we have the rules to the game. And then they can plan. And there is re-onshoring that we're seeing going on. Companies don't just make decisions out of the blue. They make it because they see demand, they see opportunity. And a lot of our companies are bringing home jobs, expanding. You look at the memory issues, right, with NAND and DRAM, prices are very high. The market is going to invest in that over time. These prices will not stay there forever. They're not going to come down today. Right. But over the next year, you look at those beneficiaries of that investment, and it's very exciting.
Chris, how many years have you been focused on small cap?
This will be my 21st year.
And over that period of time, how would you rate or grade what you're seeing right now relative to what you've seen?
Yeah, so look, I've lived through 2008 when I first became a portfolio manager. That was a challenging time, and we lived through Silicon Valley Bank. We lived through COVID. I haven't seen anything like this in 35 years that I've been on Wall Street. I lived through 2000, where there was a lot of expectation, but the credits behind the spend weren't good back then. The credits behind the spend right now is tremendous.